and quite a significant thunderstorm here. So as I say, I'm not sure. I'm probably just talking to myself, but it won't be for the first time. If you are connected, good afternoon. It's non-farm payroll again in about 5 minutes. Expectations are for payrolls to cool again. 180, depends whose estimate you believe. 185,000, 195,000, 197,000 was the Reuters smart estimate. Ranges are quite wide this week. Well, actually, they're relatively narrow. I'm saying they're quite wide. They're relatively narrow. 125,000 to 305,000 is the top number. Yeah, if you're here, Andrew's saying we're connected, so things are obviously improving. So welcome, YouTubers. Hope you're well. Unemployment expected to tick up to 3.6%. The wider U6 expected to tick up to 6.6% from 6.5%. It's really what the Fed wanted. Remember, we've had a tumultuous week, thunderous Thursday. After Wednesday night's Fed announcement, Fed still talking about raising rates. They did raise rates. They're still talking hawkishly. The market sort of ignored it, threw it off. Stocks rallied. The S&P 500 over 4,100 yesterday. Big rally yesterday. Lifted significantly by that big move in Meta. More on that later, obviously. Then we had the Bank of England and ECB yesterday, both of them also talking or raising rates. Bank of England suggesting perhaps they may have reached the top, but it's too early to tell. But that's how the market's taken it. Sterling's where's sterling at the moment? Sterling's 123.39, one of the better performing of the main currencies today. And the ECB, bizarrely, 50 basis points from them as well, and actually telling the market that they're going to do it again, 50 basis points in March. So much for forward guidance. So there we are. Mr. Lagarde still saying they may have to go again, another 25 basis points, perhaps in May. But yeah, again, the markets really don't believe it. Euro went to 110.35 following the Fed, and we're back and broke 109, and we're at 109.22 at the moment, ahead of the data. Let's get rid of this, minimize me. Let's bring up the charts. Oops, there we go. There we are. This is Euro. None of you, again, I'm not convinced. I'm not just talking to myself. There's nobody here, but as there's the Euro, 109.22 as we will wait the data. The yen, 128.56 at the moment. We've been down testing the 128 zone this morning. We didn't actually get that low, but there's 128.07. That was our low this morning. For yen, I say sterling, we just had a look at that before, didn't we? 121.85 earlier today. Now we've bounced quite strong. We've had some good PMI data. The weakest of them all was the UK. The Chinese PMIs were better. That's helped the Aussie. Also, Aussie rose on that, and we've sunk since then under 70.50. So we're pivoting through 70.50. And again, another one that rallied on Wednesday to test the 71 or over the 71.50 area for Aussie traders. I'm not sure I'm going to get the data here. I've got two different feeds here, so let's see if it's going to replenish. I'm not sure it is. Let's have a look at that one as well. My Reuters terminal looks okay. My Bloomberg TV is actually down, so there we go. So anyway, that's the Australian dollar. On the commodities front, oil is this is the daily for oil. If we've got the hourly chart, we see we've limped lower all week from that test up to the 80 zone. We got as high as 79.50 on Wednesday. We were down into close, following some hefty inventories as well. We drifted lower yesterday, and we're currently at 75.80 for US oil futures. Gold touched breached the important. You see, this is the daily chart on gold. Breached the important 1950 level. Intraday, we went as high as 1960 yesterday, but again, collapsed into close, I should say, under 1920. That big daily support level, 1920. and we're currently down again at 1903 for new day lows, and we're testing 1900. So clearly the data, I would guess, has just gone across and I can't, my network has gone down, and I can't reconnect. Let's try reconnecting. Looks like everybody's replugging their servers in. It could be those Chinese balloons over the Pentagon. Who knows? Probably more likely to be the weather here in sunny Cyprus. Yeah, I've lost all of my connections now. There you go. That's when you're plugged into the internet and you've got no backup, no alternative ranges. You are a bit doomed. Hang on, my calendar might come back. Everything's coming back, but really, really slowly. Good God, massive payroll headline, 517,000. Oh my word, the resilient US jobs market. Last month has been revised higher to 260,000. U6 has indeed gone up to 6.6%, but the average hourly earnings has slipped as well, which is what the Fed are really looking for, 4.4% on an annualized basis. Participation rate has crept up, so more people are appearing, and the unemployment rate has fallen again, which is what they didn't want. So unemployment rate 4.4%, jobs a massive beat, way out the top. Nobody was predicting that. As I said earlier, the highest expectation was 305,000. That's a massive beat. And let me just type this into the guys. 5-1. That's it, of course, if this date is correct. Might be why the power's gone down, 517 for headline non-farm payroll. All those jobs, which perhaps, it could be a factor from the very harsh cold snap they had. Lots of people came back, but 517,000. Again, I say nobody would have predicted that. Bets are off now, whether this is just an outlier. It's a huge outlier, and what the details could explain. But as I say, earnings have slipped, participation rate has moved up, and unemployment is better than expected, unfortunately. Well, not unfortunately, fortunately for lots of people, but 3.4%. So 60-year lows for the US headline unemployment level. Although I'd say the wider measure, the U6 measure, which measures a broader sector of the unemployed, has ticked up to 6.6%, but still historically very low as well. So again, the resilience of the US economy is the shining answer to those numbers. I can't see anybody here with me, so I might just take my coffee and go home. I don't know if anybody can hear or see me. I can't see your captions, ladies and gentlemen. Any questions or things you want to have a look at? But if you are listening and watching, let me just go through the main currencies then. So let's go back to dollar index. Dollar index has been moving down let's have a look. Sorry, there we go. Since this peak here around 115 back in September, down for October. It was really the November shakeout that took us down significantly into the 200-day moving average. We then moved down for December, and a big shake down during January as well. We've got this golden or death cross on the $8 index on the daily chart, where the 50-day moving average crosses from above to below the 200-day moving average. That's typically a very negative longer-term situation. So we were down here into 102, and that's been our sort of support area for January. But this week, as we've hang on a minute, there we go. This week, as we've moved lower, we went into 100.65 was our low for the week, but we've rallied on that big bluster headline back over that key 102. Right, I can see some questions here. Nepal is asking, do you know how to use Bollinger Bands? I certainly do, as there. I'll come back to you in a minute. But gold, as ever. Let's have a look, see if I can see the chat here. No, my chat's not connected, but let's have a look at the gold chart. There. So gold, as I say, having rejected 1960, we've come under the key 1950 level, and at the moment today we're under the key daily support, which was at 1920. So at 1920, 1950 consolidation we saw on the daily chart is now breached. So for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days we were in that that $30 range between 1920 and 1950. And yesterday we broke lower into the 20-day moving average. That was the key move down as stock markets rallied on those the benign numbers from or the benign outlook from the ECB and the Bank of England and those stronger confidence numbers. And so we touched the 20-day moving average for the first time in a very long time. Look, the break here above the 20-day moving average was back here on the 4th of November, Nepal. And we've rallied and rallied and rallied and rallied through these key technical levels. And now we've tested it here earlier in the week, intraday. But yesterday we closed a big down candle, a big engulfing candle, breaking the channel. Lots of profit being bagged, I would guess there. And that's a significant move. And the fact we opened below the 20-day moving average, lower half of the Bollinger Band this morning, and we've gone down, continue today, and now we're currently trading under 1900. So that has certainly rolled over, and you'll see that more aggressively here on the 4-hour chart and more so on the 1-hour chart there. So some big leg down on big times. 1895. Where's the floor? Is obviously what everybody's asking. This has been the burst in the Bollinger Band, so we're moving down. Energy is taken as lower. The RSI here has gone to 22.95, so we're into the oversold area. Big drop down there in percentage R. Virtually same sort of oscillator there, percentage R. But again, into the oversold area. See how it reacts. We're only 7 minutes into the data, but that was a big blockbuster number again. Let me just repeat. Headline came in at 517,000 new jobs created in America, in the United States. Non-farm payrolls for the January number. Unemployment's gone down again to 3.4%. So it's a 50 odd year, if not 60-year low for US unemployment. So that is full employment. So the argument that the resilience of the US market is holding up, and this big, remember they moved 425 basis points last year. They've moved 25 basis points now, so it's 4.5% interest rates have risen from zero upwards. Will they get to 5%? Will they need to go harder? So this is perhaps feeding the hawks. Therefore, the dollar has benefited from that. And we see the dollar index rallying back over 102. Euro will have moved down to test 108.50. Yen bounced from this 128.25 back a whole 100 points plus to 129.60. There's that 200-hour moving average. And nobody's connected, right? Well, I'll still keep talking. I'm going to stop talking. 121.50. And thank you and goodbye. This is Cyprus checking out. Arrivederci.